Why do you want life insurance? Why do you need to buy life insurance? Why should you buy life insurance? Or it's not for you.
No.
It's not for you. It's for the people you leave behind. Does your life insurance even pay off your mortgage?
Well, that's the number one thing that probably a lot of people don't think of.
Mistake number one. You don't have any coverage at all, or not enough coverage. And not enough coverage could be, I've got life insurance to work, I'm all set. And typically these group contracts, a company paid group life insurance will be 10, 20, even as high as 50,000, whatever the circumstance may be, or one-time salary. But typically there's always the option to buy up. So you're saying you can have multiple.
Oh, absolutely.
Yes, and what do they call that?
Layering.
That is correct. And that's a sound strategy. Welcome to the Brad and Mike Show, episode 11.
Ooh,
I know,
ones.
11.
2 ones.
I know, right. 11 episodes. Seems like just yesterday.
7 and 11.
Yeah, well, I don't know where you get the 7 from.
7-Eleven restaurant.
I don't know, Slurpees? I don't know. What are you talking about? Anyhow, let's stick to the business at hand.
Fair enough. Okay, we can.
Okay, so the business at hand is we're going to talk about life insurance today. And
Okay.
We're going to talk about the mistakes and why life insurance, what the heck happens if you choose incorrectly. What are the mistakes that people make?
If you choose unwisely.
Yes, and it happens. It happens
does.
quite a bit. And you know, what I can tell you is that we know when we speak to people about life insurance, generally the only time they ever talk to us is something's going on, right?
Yeah.
Occasionally there'll be someone who's planning ahead, but there's something that's going on, or perhaps something happened to a family member, and they realize they need to get some life insurance.
That's usually typically the case. I
Yeah.
mean, somebody didn't probably wake up this morning and said, I got nothing else to do. I should look into life insurance today.
Exactly. You know, though it is one of the things that while people, they just put it off. They put it off. And the thing with life insurance, as conventional wisdom would dictate, when you're younger, it's really inexpensive. However, when you're 23, you're not thinking about that kind of thing.
Dude, you're Superman. You're like, I've got the rest of my life
That's
ahead
right.
of
You
me.
get the tiger by the tail, as they say. And look, you're going to live forever, and we get it. But if you do look at the rates when you're younger, the rates are very agreeable when you're a young person.
Yeah.
However, how much money you make does also factor into the amount that you can be insured for.
Mm-hmm. Correct.
So when you're younger, perhaps you're not earning, it's less likely you're earning the potential that you will when you're in your 30s and 40s, when most people start thinking about life insurance.
Oh, yeah, because you're usually building a family at that point in time.
Yeah,
you have homes, cars, you got a future. And I mean, the reality at that point in time for a lot of people is that, I don't have life insurance and now I need it. And when they're younger, like you said before, when you're 23 years old, you don't think that you need it, which is understandable. I mean, both you and I were 23 many, many moons ago. And we didn't think we needed it.
In my mind, I'm still 26. My D's remind me, no. But
yes. But along those lines, like I got married, started a family, that type of thing. And then I looked at it as far as coverage that I had at that point in time, it needed to be changed. And, probably one of the biggest mistakes that people have with life insurance, probably the number one, is that they have absolutely no coverage at all. Like they have
that's true.
Zero. They got nothing.
Let's expound on that and pose a base premise, a base question. Why? Why do you want life insurance? Why do you need to buy life insurance? Why should you buy life insurance?
Well, there's a whole lot that goes around that most people don't think of. I mean, if you're single, you're young, you had made mention, you got the world by the tail. Yes, but the reality is that you still, in most cases, I'm just going to throw this out there, that you probably still have a mom and dad somewhere alive at that point in time if you're in your own 20s. And if something were to happen to you, I know with my children, if they didn't have life insurance, I'd make sure that they had a proper burial.
Of course,
but
right.
it's not an expensive.
But it can be a financial burden. I mean, the average cost of a burial in Michigan is between $8,000 and $12,000, and that's probably, quite honestly, on the low end.
Yes. I mean, if you throw in some type of a viewing at a funeral home, that type of stuff, you got the church. I mean, $20,000 would probably be a baseline number to probably use. But the reality is when you're younger at that age, you don't think that you're going to pass away. I mean, it could be a car accident. It could be, any type of an injury. It could be, unfortunately, that you were diagnosed with cancer at a young age.
Yeah.
I mean, in our world, we see that happen. And the reality, unfortunately, is when there's not anything in place for a younger kid, it's impactful to, obviously to the parents. But at the same time, the main reason I think most people don't think about it is because a couple things. Number one, they think that they're going to live for a much longer period of time. But the other aspect is they probably don't realize how inexpensive it actually is at a younger
Especially.
age.
Very true. Very true. Very, very true.
Or how do I get it? Or, I don't even know. Or I get it through work or something along
Well,
those
and
lines.
let's talk about A. So who's life insurance for? We addressed why you should do it. Well, we're going to go into a little more detail on that, but who's it for? It's not for you.
No.
It's not for you. It's for the people you leave behind. Whether, as you had illustrated, a parent to offset the costs of burial, God forbid you pass away when you're younger. But if you're married and you've got kids, right? And
absolutely.
you don't have adequate life insurance, or what we hear often, and I hear this, if I had a buck for every time I heard this, oh, I've got life insurance through work, I'm all set. I'm all set.
Yeah,
And
you do. So, it goes back to the whole adage, something's better than nothing, when from that perspective. But even though, you don't have enough coverage for what's really going on. And where I go with this is to say, okay, you're married, couple of kids, you're in your mid 40s. Something happens.
Are you renting or do you have a mortgage? So let's just assume you have a mortgage.
I would assume that you have a mortgage.
Yeah. So how much is your mortgage? Does your life insurance even pay off your mortgage?
Well, that's the number one thing that probably a lot of people don't think of. Number one, it's going to pay off the mortgage. Secondary to that, you want to look at your kids. Are you planning on in some way, shape, or form trying to help them through paying for college?
Yeah, you
Or
want to leave
pay
a
for
financial
college?
Legacy.
Yeah.
Absolutely.
Well, here's the other part of it though too. Something happens to you, and then your child is looking. There's so much chaos that goes in at that point in time. So then life gets turned upside down. Where do you start? Where do you go? Does your child look at, saying, based on us now living here, it required two incomes coming in and we just got mom or dad's income and there's a shortfall. So does a child need to go to work to help?
Right. Well,
you
raise a very valid point. It's income replacement as well. And you've got to extrapolate out. If you're married, say you're in your 30s or 40s, you're married, you've got some young children, and one of the spouses passes away, man or woman, whatever the case circumstance may be. That being said, how much income replacement do you do? Do you know what? Well, I'm going to tell you. Conventionally,
Gee, Brad, I work with you. I hope I know that answer.
No, conventionally, the thought is that you should have at least 10 to 11 times your salary.
That's correct.
Insured. So if you make $100,000 a year, you should have $1 million worth of life insurance. You make 60, you can do the math.
Yeah.
Whatever the circumstance may be, the idea is that you leave a financial legacy to the surviving spouse, that they can maintain a lifestyle that they've been accustomed to, and that they don't have to sell the house and move in somewhere else.
Well, and I'll take it a step further. So, for instance, if you're married and you have a couple of kids and you and your spouse go out on date night,
yeah,
and something unfortunately very bad happens, and you're in the car and both of you pass at that point in time, you now have children.
That's right.
So where are the kids going? Now, people will say, oh, it'll be my sister, my brother, whatever. Well, what's that look like for them at that point? Here's where I'm going to go with this, is to say they live in a house. They might have a 3-bedroom house and 2 kids of their own. Well, if you have a couple of kids and they end up coming in, where do they sleep? What happens to that house at that point in time?
Yeah.
To the mouths that get fed at that point? Along those lines, it's like to say, okay, well, the extra money that's available through life insurance could help them add on to their home.
Right.
So that 3-bedroom house could become 4 bedrooms. They could finish the basement off. Whatever the situation might be, that money could then be utilized to help facilitate your children's future life at that point in time, going to college, making sure that there's food on the table. Because if people are pressed for money in their own right for feeding their own family, and now you're going to have 2 or 3 other kids that come along, wow, now the food bill, which is horrific in its own right, now doubles that.
Yeah. Well, so let's recap. So, mistake number one, you don't have any coverage at all,
Yep.
or not enough coverage, and not enough coverage could be and again, as I said earlier, if I had $1 for every time I've heard people say, oh, I've got life insurance through work, I'm all set.
Well,
And usually that's only 1 or 2 times salary, if that.
Well, if that, because a lot of companies will have $10,000 or $20,000, and that's the life insurance. And trust us, we've seen this because we deal with
So
this
many
on a
times.
daily basis. Unfortunately, we get these calls. So and so passed away. Can you help us file the claim? Sure, it's $20,000. Well, finding out that they don't have any other life insurance.
Yeah. And typically these group contracts, a company paid group life insurance will be 10, 20, even as high as 50,000, whatever the circumstance may be, or one-time salary. But typically there's always the option to buy up. And when a carrier is brought into an organization for the first time, you can buy up without proof of underwriting. So it's a guaranteed issue.
And
however, but if you pass, and then, invariably people are like, I'm not going to spend more money. I've already got enough coming out of my check. And they don't buy up. And then all of a sudden they get a diagnosis or something goes sideways and they go to apply for it. And they're like, no, I'm sorry, we'll have to underwrite you now.
Yeah.
And they can't get the life insurance.
Yeah. So that's the other part of it too, going into the work aspect of it too, is, they usually have a guaranteed issue amount. And most people go up to whatever that is. So depending on the size of the company, it might be 50,000, might be 100,000. And while they could go up to, let's say, 250 or $500,000, they usually stop right at the guarantee issue amount.
That's right.
Because they don't have to answer any questions. It's just, this is the
it's
easy.
Convenient. It's
What's
the
easy
path
button?
of least resistance.
Like that easy button.
Absolutely.
And that's what they get. Now, the other problem that you have, especially with group plans through companies, is that there's an age bracketing. So meaning that
the rate rises as you age, and it's
Absolutely.
typically in 5-year increments. So as you age, the policy premium goes up as well.
That's the whole aspect.
Right.
So you may look, as you start to get older, you're going to want to peel back some of them and be like, man, this is getting expensive. Well, it goes back to the earlier premise. It's cheaper when you're younger.
Yes,
There's no doubt about it. It becomes more expensive, which kind of leads us into the
You
next
segue
part.
it very nicely. Very
Did
nicely
you like
done.
that?
You did that well. You did that well. So
No.
the segue is what type of life insurance is best?
Yes.
And to borrow a phrase from The Office, Bears beats Battlestar Galactica. Anyhow, Michael, I had to throw that in there.
Yes, you
huge
did.
Office fan. That being said, so there's term.
Yes.
And there's permanent.
Mm-hmm. Yep. So a term basically is going to be for a term or a set period of time.
What are the most common term periods that we see?
10, 20, or 30 years.
That's typical.
So with that being the case, term is going to be the least expensive because that's
Indeed.
always going to be for a certain period or term. So the life insurance carrier knows that they only have risk for 10 years, 20 years, or 30 years in the event that something were to happen.
Is term insurance less expensive than permanent insurance?
Yes.
Yes, it is.
Yep. Hands down. Hands down. But it also is the one that most people will have when it comes to covering their mortgage, covering their children's college educations. And the reason being is that with term insurance, what's really nice about this is that people will utilize it to cover those additional costs that they have as they get older. So meaning that somebody, while they're young, may take a term policy, and let's say they do $100,000 for 20 years because they're just a single person at that point in time. Well, then they get married. Well, what's nice with term insurance, what a lot of people do is they'll layer it on.
So you're saying you can have multiple.
Oh, absolutely.
Yes. And what do they call that?
Layering.
That is correct. Yes. Not that I'm testing you or anything, but that is. And that's a sound strategy.
It is, because what will happen then is then you can layer those policies one up on top of another. So for instance, if you have, the mortgage, well, the mortgage is a 20 or a 30-year mortgage payment. Well, then you do life insurance for whatever that mortgage is for 30 years, takes care of that.
Right.
For the kids going to college. Well, if you have a 15-year-old versus a 5-year-old, well, then you kind of know exactly how long you want to do that layer of life insurance for as well. So maybe if the child's 15, well, 10-year term policy, put that into place to cover that in the event that something happens.
So let's say that I'm a young couple, or you're a young couple and you're married and you've got a new child and you've got a mortgage, and you say, my mortgage for 30 years, I buy a 30-year term policy to cover my mortgage. Is that all I need?
No, that's just covering the mortgage.
That covers the mortgage. So what about loss of income? What if I would
Well,
have?
that goes back to your 10 times.
Well,
So,
I know.
So
I know.
if that's the case, I mean, think about it. I mean, if you're making 50,000 and you're in your mid 30s versus now in your 50s, you're making 100,000.
That's correct.
Get some more life insurance and layer that up on top. The nice thing about when you do a layering approach at that point in time is that, when you have it, you buy it and you lock it into that rate based on that.
That is correct.
So if it's a 10-year term, you pay the same rate for 10 years, 20 years, 30 years, doesn't change. Death benefit remains the same. But you can layer those up on top of one another, or depending on how many plans you may have, maybe look to consolidate.
Sure.
You don't have to,
And
but it
depending on-
depends on your age and your health. Because in some cases, maybe when you were younger, when you got the first policy, maybe you had some type of a condition. Maybe that condition is no longer in existence 10
perhaps
years
it
later.
mitigated. That's
You know,
correct.
and so it might behoove you to maybe look to a new policy or maybe even go back to the carrier at that point in time to see if they would change the rate table on the policy, because some
Right.
carriers can do that.
And
Not
different
all, but-
contracts with different
Yes.
carriers have convertibility language built into the policies as well, which means that you can convert it from a term policy to a permanent policy.
So that's really huge. And that's something that when you're looking for life insurance, you really want to look for the convertibility aspect. You're going to pay a little bit more for that contract, but here's the key and the reason why that's there is because let's say that 10-year term that you took out when you were younger, you're like, wow, you know what? I still want to keep the life insurance and everything else, but at the same time, I'm good everywhere else, but I don't want the policy to go away. Well, you can convert that into a permanent policy if you want to, which is at that point in time, well, geez, now I can continue the policy. Or maybe, you've gotten older, everybody's gone, left the home, your mortgage is gone, everything else, but you still want life insurance for when you do pass. You can convert that term into a permanent style policy, which isn't going to fall away. And you actually lower the amount of life insurance to basically cover what your needs are at that point in time without
Right.
having to go through the whole process. So it behooves you to take a look to see if that's something that is available for you.
So to put all this in context, and there are a lot of different carriers out there with different life insurance contracts, and what we suggest is that you could give us a call, talk to your trusted advisor, whoever that may be, have the conversation, start the conversation, find out what it's going to cost. It doesn't cost you anything to kick the tires.
Absolutely costs you nothing, but at the same time, I can tell you this, look at term, look at permanent if you want to. Permanent's going to be a lot more expensive.
It's a little more
than
expensive, but there's
term,
guarantees to it that
There
are very
are.
attractive, and there are investment components as well.
Yes.
They're very attractive to people. You can layer term and permanent together, and
can.
there are a lot of ways to
Mhm.
offset your risk of passing away before your time.
Well, the other part of it too is that, you get older and then next thing you know, you're looking to retirement. And then you may be looking to have legacy planning where you
correct.
want to take
Yeah.
what you've earned in your life and everything else, maybe you want to set it aside for your kids. So maybe buying some type of a permanent policy at that point in time
Indeed.
makes a lot of sense because you can buy that policy, maybe pay on it for, let's say, 10 years, let that thing go, and then it's going to continue to be there so that when you pass away, it's going to transfer over your wealth to your children at that point in time upon your demise. Because let's face it, death and taxes. So,
As they say, the two guarantees.
amen. Yep.
Yeah.
So that's the whole thing. We have an expiration date. So along those lines, you might as well figure out the way to maximize that maybe for your family, to leave that lasting legacy.
I thought you were going to say the Red Wings collapse in March as well. But hey, I don't want to get started on something like that. But get me upset about the Wings.
Slow down.
So let's talk about what's the action. Give us a call. Give us
Yes.
a call so we can have a conversation.
Yep. Give us a call, 734-259-6750.
And I'll tell you what, I promise, if you call us, we're not going to chase after you. We're going to leave the ball in your court. You call us, we'll have the conversation. You're in control. We're not going to bother you. We're not going to call you a bunch of times to say, hey, have you made a decision? We're not going to do that. If you want to do it, you do it. If you don't, you don't.
Well, here's the other big thing, too. They can visit our website. So just
That's
go
correct.
to www.bradandmike.com. On our website, we actually have a life insurance program that allows
That's
you
correct.
to see the rates. So meaning that this is always the big thing. You're like, how much does it cost? Well, it's 10 o'clock at night, and I just thought, I'm listening to this right now, so let me go look. Go to our website. You can do that. You can put in your age, ask you a couple of qualifying questions, realistically all around kind of your current health. Not
Sure.
a whole lot of in-depth type stuff, but it kind of will put you
Yeah.
into, say, if you got certain conditions, it's going to rate the different numbers and that stuff. But you'll get an idea as far as how much the life insurance is. And that's really what you're looking for. And that's
it's a
the first
starting
place to
point.
start.
It's a starting point.
Yeah.
It's a great starting point. So again, 734-259-6750. Thank you for tuning in to episode 11 of the Brad and Mike Show. I get a sense that this may be our first podcast about life insurance because there's
is.
so much to cover.
Well, there's a ton. I mean,
Yeah.
there's so many, real life examples.
And as I'm looking down here at our clock, we're already at 19 minutes. So
They've
we
already
got to
tuned
wrap
out.
this up because we know everyone out there in podcast land, their attention span doesn't exceed 20 minutes.
That is correct. So with that being the case, thank you for
Thank you.
watching.
Thanks
Like and
again.
subscribe, and we'll see you on the next episode.